How about if I tell you that you can make some extra income with the stocks that you currently hold or the position that you hold in your portfolio? Let me show you how. I have an Apple position in my portfolio. Now, remember, this is my paper trading account, not the real one. I have some different positions in the real one, and I have a different strategy, different methodology in that account. Because I hold this stock here for trading purposes, I'll show you exactly how to make extra income on your current holdings in the portfolio. Today, we are going to sell a covered call on an Apple position, which I bought, some time ago for $200 per piece, and I have 100 shares in that. So with 100 shares, what we can do is we can sell one covered call, which means every call covers 100 shares. If your stock is called away, you will lose the 100 shares, or you will be called away on those 100 shares, meaning you will have to let them go at a certain point or a certain price. One of the mechanics of trading covered calls, which strikes to pick, how far out should you go? This is what I do. This has worked for me in the past. This has worked for me for most of the time, and therefore these are my mechanics. So 17 delta, 45 days to expiration, 45 to 50 to maybe 55 days to expiration, and that's how I trade cover calls and any other strategy as well. My go-to is to trade on probabilities and sell options where the probability of making profit is more in your favor or in the seller's favor instead of the buyer. Buying options is a losing proposition in my mind because you lose on theta decay, you lose on multiple other things, on direction as well, because you've got to guess the direction right. When you sell options, you don't need to guess the direction right 85% of the time, or maybe at least 80% of the time. You can choose the wrong direction and you can still make money. There's a limitation to it, meaning because you're getting such high probability of profit in your favor, you are going to give up some upside. You will have to put some money down to trade this, and then there's a limitation of premium that you can collect. So anyway, let's dive into this. Let's see how we can trade a cover call on this Apple position. Couple of things to note here. Let me show you how this thing is going. I don't have any other position in the account right now, but I have this Apple which was bought at 200 price a couple of months ago. So currently it's trading at $272, up quite a bit. P&L is up 36% so far, which is totally fine. Now, what to do with this position? How to earn extra income on this position if you were holding the same position in your account or slightly different, or whatever you other tickers you own in your portfolio. Now, first thing to note on cover calls, you got to be comfortable letting the stock go away from you at a certain point or a certain price. So let's say you bought something at 200, you are okay letting it go at 275, 280. There's a good percentage of return in there, and you're okay to let that stock go away. Now, if you think there is a lot more bullishness in the ticker or in the underlying stock or ETF, then you should not be selling calls. You should not be selling calls on it, because then you are thinking that the stock can move up even further. Even though it can, you can still collect some premium, you can still collect some income on it, and just be mechanical and be very, very aggressive with your management, with your risk management, with your account size, with your trade size. So those are the things that I would look at. There's a 43-day cycle. This is the one that I will not touch because it's a weekly cycle. So with the weekly ones, let me show you how these weekly ones are configured. So look at these two columns, open interest and volume. These are the two main columns I look at for liquidity, meaning if there aren't enough contracts going through the system, people are not actually buying this or trading this or selling this. And therefore, I would not touch a weekly cycle. So weeklies are a no-go place for me. So I don't touch this. So that's a cross. Now, the next available cycle with my kind of days to expiration is 64, which is totally fine. It's a good stock and the market has been up. Another reason I thought about selling a call on this today is because the market is up. As a contrarian, I would always sell calls in the up market because that's where the juicier premium is, and then sell puts in the down market. We recently did a meta trade cash secure put, and we made a good return on that because we went into the strategy when the market was really down. So we picked up the bottom somehow. That's a very difficult task to do, to pick the bottoms and the tops. But because the probability was in our favor, the market was down, and I was selling a put on that stock. So that thing went away from that. It went up. It's called a risk reversal trade. That's how 90% of my trades are built and initiated. And then I manage the position, meaning if it goes wrong, then I manage the position by either adding a different side, selling something else, or rolling it out in time, or, doing something with it. Now, if you're with me so far, if you're going to look at how I go through these strategies in detail, there's a 5-day option trading challenge I run. It's going to take place on January 19th, and it'll be like 5 days, 1 hour each day, and then 30 minutes of Q&A. I'll put the link in the description. Briefly, we will cover how to start option selling, what is the mindset, how to actually get into it, the basic strategies for option selling, the beginner friendly ones, and then we move on to the intermediate ones, which are spreads and classic iron condors. And then finally, we discuss our very successful, profitable, a good strategy for our zero DTE iron condors. There's a lot of videos on my channel for zero DTEs where we're making money trading these positions, and then how to basically structure these, how to take them off, what time to trade these at. There's a certain time that you should trade these zero DTEs at. Like right now, I'm in the Pacific time zone, so there is 2.5 hours left in the market close, but I will not touch this trade at this point because the time is already gone. The premium is not available there, and I can show you that on the video as well. But yeah, just check it out. There's There's 100% money back guarantee on this. If you don't like anything, just email us. We'll give you everything back. You don't have to like get on the camera, give us any proof that you didn't like it. Just email us. We'll give everything back. Anyway, let's get back into the trade. So Apple stock is trading at, it's up a little bit today, trading at 272s. Okay, so here's another difference I was going to show you. Volume and open interest. Look at these numbers in thousands. So this is what you need to look at for liquidity purposes. Otherwise, you will be charged a lot of money in slippage. You will not be able to get in and out of the trades quickly or at your favorable price. You will have to give up something to get out and get into the trade. So always look for high open interest, high volume columns. Same on the call side. If you come down here, volume and open interest are here. Look, these are all in thousands. This is what we like. And therefore, this is what we go for. Okay, 64 days out. That's a good time period. Slightly longer than my regular 45 day to 50 days. But again, it's okay. Holidays are coming up. I would like to be in the trade and collect some theta premium because markets are going to be closed for a few days. So let's get into the trade. Let's also check the chart and volatility. Volatility is slightly dim right now. It's down at its bottom, below its average, but it's okay. On average, this thing implied volatility in Apple is about 23. It's trading at 21 right now. So down at the bottom right now, but it's okay. We are going into this trade thinking that we will let the stock go away at a certain point. That's the only reason we are going to sell a cover call on this. If you're not comfortable with that notion or with that mindset, then, you should not trade with that mindset. You should trade it with the mindset of just earning income and in the process losing some money if that's the case. But here we will try to make some income and then let's see if we can let the stock go away at a certain point. If we don't, we still think there's bullishness in the market. We will close this short call out and then we'll move it out in the next cycle. So go to strike 17 delta. Okay, good open interest, good volume going through. 1980 contracts traded today, 30,000 overall open interest. That's pretty good. It's selling at $2.23, 219 for the bid. This is what we will get when we sell this. It's a 300 strike. Nice ground number, $30 out from here. Also look at the 14-day average true range of this stock. It's about $6 or $5. On average, in the last 14 days, Apple has moved $5 a day. That's what this average true range tells us. In the last 14 days, this thing has moved $5 a day. So however you want to look at this technical indicator. So 17 delta, I'm going to right click here, right click, sell a single. I'm only selling a single because I'm holding long stock. So I'm only selling a single and I'm only holding 100. If you only hold 100 stock and you sell more than one contract, then you will be charged out of pocket to put money down. But if you're holding 100 stock and you're selling one contract, you will not be charged anything. The out of pocket cost is zero. You will only pay the commission to trade this option, which is 65 cents in my account. Could be different in yours, but let's look at it overall probabilities here. So it's expires on 2/21. We need to change the date here as well to get the right chart going to 20. Okay, so there's something off here. It's not picking up the right chart. Let me reset this. Okay, now let's just reset our break even again and then change this to 2/21. Sometimes in the pivot trading account, the probabilities or the charts are slightly off. Again, this one looks a little bit off too to me. It doesn't look like it is. So usually you would get a 75% plus probability of profit in this trade, but something's off on the chart, which is totally fine. Not a problem. I'll just show you the Greeks on this one. Now, this is a long delta position, meaning you are still long the market. If you select your 100 stock, the long stock that you have 100 delta because you have 100 stock, right? Look at this number, 100 delta and then nothing else. No gamma, theta, or vega. It's just a straight line up onto the right. Now we are selling at 17. So you need to cut this 100 down by 17 because you're short 17 delta. And therefore your overall position will become 80 something delta. What that means is if the market goes up $1, you will make 80 cents, not $1. You will make 80 cents. And that's what you've done with you've reduced the risk of going 1-for-1 in the market by 17 delta basically, and you've collected some income in that process. Now you are short volatility. This is something that can hurt us in the trade if the volatility jumps up, but our plan is to stay in this trade for a long time and then look at the position and manage it when it's 20, 25 days in. So probably by the end of next month, we will look at it, or middle of the next month, we look at it again and then see where we stand. Do we need to adjust it? Do we need to do anything else? 17 delta, 64 days out. This is a good number. Overall, the max profit that you can collect on this is again the amount of premium that you collect, which is 218. If you want to right click and confirm and send, you will see the mechanics of it. So 65 cents will be taken away from 218 right now. And then when you close the trade, you will be charged another 65 cents. But remember, if you have to manage this trade, you have to roll it, do something with it. Again, every single time you touch the contract, you will be charged 65 cents, or at least that's how I will be charged. So $218, no extra buying power effect. You can see that here. There's zero buying power effect, meaning there's nothing going out of my pocket here. But if you trade more than one, and I want to show you that as well. So let's say we select 2 contracts here. Now for 2 contracts, you will be charged some extra out of the pocket money, which is you need 100 shares to trade an extra contract. Therefore, the recommendation is to stick with your 100 shares, 1 contract rule. Every 100 shares will control 1 contract. So always just stick with that. Unlock this one and then see where it's trading. Let's just get it at 215 or 214, whatever that number is. 214 minus 65 cents. Let's just put that in. See how that comes up. There you go. The position is in. Again, like I said, it is still a long delta position. You are bullish on the market, and then you are short gamma, you are long theta. Obviously, this is the reason why we're in the trade. We want to collect this theta every day. As a seller of the option, we will always collect positive theta, and then you will be negative vega because you are shorting the volatility. When you short the option or when you sell the option, you are shorting volatility. In this case, this could be hurtful to us because the volatility can jump up, which is fine, and then we can trade the market whenever that happens. Again, the crux of it is because the market was up today, overall market is bullish today, and therefore that's why I would decide to go into a trade a short call option. Like I said, watch other videos. There's plenty of content on my channel, on my website, and the blogs. We do write a lot of blogs on these strategies. Go in the blog section. I'm not just selling you ticket here, and go into the blog section. There's a blog section on the website, which is here. We do free master classes as well. Just go sign up for it. See if that's worth your time. All these strategies are written out. We are writing more content, so take a look at it. Drop me a comment if you have any. Thank you for watching my video, and hope to see you again. Thanks. Bye-bye.